Hello, everybody. My name is Luis Galvez, Technical Marketing Manager with Wolters Kluwer Tax and Accounting. And joining me today are Radha Mohan and Charlie Iovino, tax policy experts from the Brownstein Law Firm, to provide insights on recent tax policy news and updates. Now, the COVID package passed in late December contains a number of employee benefit provisions, many of which are applicable for 2020. So today we're looking at these both from the employer and the employee standpoint, considering that one of the main drivers of the bill was an extension of unemployment benefits. So Radha, can you please explain what these benefits are, and are the benefits going to be taxed or not?
Of course, Luis. 4 things I would note about unemployment benefits. The bill expands the Pandemic Unemployment Assistance Program for individuals who would otherwise not qualify for unemployment benefits, such as gig economy workers and self-employed individuals, through March 14, increasing the maximum number of weeks from 39 to 50. The bill also reinstates the federal Pandemic Unemployment Compensation Program, which previously provided a $600 supplemental federal benefits payment through July 31st, 2020. This bill reinstates that program, but only provides $300 supplemental federal payments through March 14th. The bill also provides an extension of short-time compensation arrangements that were included in the previous bill, and it includes return-to-work requirements and other program integrity measures to ensure that individuals cannot refuse employment and still receive benefits. It's really important to note that these benefits are taxable. However, they do not count as earned income for the purposes of the Earned Income Tax Credit and will not be used to disqualify recipients from other federal benefits.
Okay, thank you, Radha. That certainly covers the scenario where employers have to terminate employment due to adverse consequences from the virus or government restrictions. So, Charlie, what about the flip side, when an employee needs to step back from work due to a personal illness, exposure to coronavirus, or to care for a family member?
Great question, Luis. Under the Families First Act, employers with fewer than 500 employees were actually mandated to provide up to 80 hours of paid sick leave for their employees. The mandate expired at the end of the year, but employers who choose to provide paid sick leave going forward can continue to claim the credit through the end of March. The tax credit is equivalent to the amount of pay up to $511 a day for 10 days for employees themselves who are subject to state, federal, or local quarantine who are experiencing coronavirus and are seeking a medical diagnosis. The tax credit is up to $200 a day for 10 days for employees who are unable to work because they're caring for another individual who is quarantining, or they're caring for a child under the age of 18 due to a school or daycare center closure. The tax credit is allowed against both the employer and the employee's share of OESDI taxes, both shares of the Medicare taxes, and federal income taxes withheld from the employee's wages. If the amount of the credit exceeds these sums, it is refundable. And covering examples, if an employee is experiencing coronavirus symptoms and is paid 10 days of qualified paid sick leave, up to $511, this paid leave is taxable income to the employee, and the employer is paid a refundable tax credit of $5,110. The second example involves a dependent, and the employee is entitled to a lesser amount of $200 per day.
Thanks, Charlie. So the $511 per day sounds like a significant benefit, but I hear you saying that it lasts only 2 weeks. So what if a worker needs extended leave because they or a family member gets really sick from COVID?
Great question, Luis. The FFCRA also provided a paid leave benefit of 12 weeks. The first 2 weeks are actually covered under the paid sick leave that we just discussed. This benefit is no longer mandated, but if an employer provides paid leave, the employer is entitled to a refundable credit that is equal to $200 a day or up to $10,000 annually for each eligible employee. The credit actually applies against the same taxes that we talked about with this paid sick leave, and this credit sunsets also the end of March 2021.
Okay, thanks, Charlie. And finally, Radha, what other benefit provisions are there in the bill?
Luis, there are several. I will highlight a few that affect individuals and small businesses. First, the bill makes changes to flexible and dependent care flexible spending arrangements. It allows taxpayers to roll over unused amounts in their health and dependent care FSAs from 2020 to 2021 and 2021 to 2022. It also allows for a mid-year change to contribution requirements in recognition of the fact that employees are changing spending habits on dependent expenses such as childcare and elder care due to COVID-19. Second, it expands the employer-provided educational assistance program, allowing employers to contribute up to $5,250 towards paying student loans without it being counted as taxable income for the employee. This provision is extended through December 31st, 2025, and is applicable to the 2020 filing season as well. Third, the TCJA's provision providing a tax credit for employers that provide paid family and medical leave to their employees was also extended through December 31st, 2025, and is also applicable for 2020. However, this credit should not be confused with what Charlie just discussed earlier about the sick leave and paid family leave credit under the recently passed bill and the FFCRA. Finally, this bill allows pension plans such as qualified defined benefit plans and money purchase plans to provide in-service distributions to participants on or after age 59 and a half. Previously, the age requirement was 62.
That's great. Thank you, Radha and Charlie, once again for sharing insights on tax policy information tax preparers should keep in mind as they educate their taxpayer clients. You can download all the information shared today by visiting engagetax.wolterskluwer.com/tax policy news, where we'll post this video and other tax-related tax news. So stay tuned for more updates. Radha, Charlie, thank you for joining us today, and thank you everybody else for watching. Bye-bye.